This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. energy company Equitrans Midstream Corp's long-delayed $6.6 billion Mountain Valley natural gas pipeline could win federal approval as part of Washington's debt limit deal. Streamlined federal approval for the 303-mile, 488 km project was placed into the text of the budget deal between U.S. President Joe Biden and House of Representatives Speaker Kevin McCarthy that may end the debt limit crisis. The pipeline is backed by Democratic West Virginia Senator Joe Manchin, whose vote is often needed since the Democrats hold a thin majority in that body.
Profits at China's industrial firms slumped in the first 4 months of 2023, official data showed on Saturday, as companies continue to struggle with margin pressures and soft demand amid a faltering economic recovery. Profits fell 20.6% in January to April from a year earlier, compared with a 21.4% decline in the first 3 months, according to data from the National Bureau of Statistics, NBS. In April alone, industrial firms posted an 18.2% drop in profit year-on-year, according to the NBS, which only occasionally gives monthly figures. Profits shrank 19.2% in March.
Moving on to the top news in the energy sector.
Vietnam's imports of crude oil, coal and gas in the first 5 months of 2023 rose strongly from a year earlier, despite a plunge in overall imports, official data showed on Monday. Imports of crude oil in the January to May period rose 39.9% from a year earlier to 4.66 million tons, while coal imports increased 27.9% to 15.56 million tons, the General Statistics Office, GSO, said in a report. Those contrast a 17.9% fall in Vietnam's overall imports in the period. Most of coal imports were for power plants. Coal is set to remain a crucial source of energy for Vietnam, a regional manufacturing powerhouse, until 2030 before being gradually phased out.
China's independent oil refiners are ramping up fuel oil imports to process into gasoline and diesel amid robust refining margins as ongoing cargo inspections at refining hub Shandong have cut off supplies of lower-priced feedstock bitumen blend. The independent refiners, known as teapots, are mainly based in China's Shandong province, where the government has increased inspections to identify instances where crude oil is mislabeled as bitumen blend, a mix of Venezuelan heavy oil and residue fuel used to produce road paving asphalt. The inspections are forcing refiners to turn to fuel oil instead of bitumen blend, driving the higher fuel oil imports, said traders and analysts. Next, we have the top news in metal markets. Shanghai copper prices rose on Monday, as risk sentiment improved after U.S. President Joe Biden and congressional Republican Kevin McCarthy agreed to suspend the government's debt ceiling. The most traded July copper contract on the Shanghai Futures Exchange rose 1.5% to 64,850 yuan a ton. Aluminium advanced 1% to 18,045 yuan a ton, and zinc climbed 2.1% to 19,375 yuan a ton. McCarthy and Biden forged an agreement on Saturday to avert an economically destabilizing default to suspend the $31.4 trillion debt ceiling until 2025.
A global aluminium producer has offered Japanese buyers a premium of $165 per ton for July to September primary metal shipments, up 27% to 32% from the current quarter, 3 sources directly involved in quarterly pricing talks said on Friday. Japan is Asia's biggest importer of the metal, and the premiums for primary metal shipments it agrees to pay each quarter over the London Metal Exchange, LME, cash price set the benchmark for the region. For the April to June quarter, Japanese buyers agreed to pay premiums of $125 to $130 per ton, up 45 to 53% from the previous quarter.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures fell on Monday after 3 straight sessions of gains, due to weakness in rival oils and a quieter market. The benchmark palm oil contract for August delivery on the Bursa Malaysia Derivatives Exchange was down 1.15% to 3,518 ringgit, $793.24 a ton on the midday break. The contract rose 2.24% last week as the El Niño weather phenomenon raised output concerns. The Bursa Malaysia Derivatives opened gap lower, mirroring weakness in rival oilseeds. Market quiet with low trading volume as US closed for Memorial Day holiday, a Kuala Lumpur-based trader told Reuters, adding that some technical buying emerged at late hour but failed to sustain. That is all for today's news on commodity market. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.